I was just about to hit the record button in my $10 recording studio when my sweetie pie, she called me up, so just got off the phone with her. Her and Coco, kid 2, they'll be flying home from Mexico. Viva la Mexico. Más cerveza, por favor. So I'm excited for that. Get to see them. They won't be home till late tonight, though. I think they arrive at Midway, like just around 9 p.m. And then it's about an hour, 15-minute drive, hour and a half drive from Midway to the fields of Valparaiso, Indiana. So I might still be awake. It's still a school night. Got to get up with kid 3 tomorrow, but I'll be watching basketball probably till late, so I'll likely be up. Anyways, enough about that. Let's get back to this. So that SPY credit spread we put on earlier is holding up pretty good. Let's take a look at SPY 293.18. It's found some real sideways movement after it bounced up pretty high right through here. So we look for it to continue to go sideways, even a little down, just for my own psychology, for my own peace of mind, because I don't want to be looking at that all day while I'm trying to concentrate on my Pringles. Over at the Meijer today, I just told this to Stacy, and she wasn't nice about it. I told her that I picked up a couple bags of the Frederick's kettle chips. I love those Frederick's kettle chips. I made a little chip dip that's marinating in the refrigerator right now. And then I saw it had 3 for $7, like 3 cans of Pringles for $7. I'm like, hello, who doesn't like Pringles? And we're supposed to be eating healthy, but come on, it's March Madness Day. So she wasn't happy about that. But what I am happy about is freeing up some more dollar bills. Let's take a look at what we have going on that is expiring between now and the end of trading tomorrow. The 89 puts on the Googler. 89 puts on the Googler. Look at Google. Hello. It's me you're looking for. I can see it in your eyes. Google doing very well, which means we can probably trade out of this. How many contracts? We got 2 contracts between $1 and $2 a piece. And this is part of some rolls. We are rolling. And normally I would just roll this for more dollar bills, but I'm going to close it out and regroup so I don't have to really do much of anything but watch basketball tomorrow. So let's see. We got 2 contracts. Can we get it for $1? It says low likelihood. We'll put it in. Free up $17,800 in collateral if indeed, and it should feel right. This continues to climb, it will. And as that time decays today, so we'll keep an eye on that. If you did watch the previous video, Abby V, I was able to buy that close for $5. So I got my bratty way. I want my extra dollar, Daddy. I do. So I was able to get that. So this will be still on the pending side of things. Let's go back down here and check out the next Google puts. We got 4 at $88. So it's at 98, almost 99% profit. And that one had a nice paycheck when we put that on. We made that trade on Valentine's Day. We did that on Valentine's Day, February 14th for a expiration of tomorrow. So not a lot of time left and a huge spread between where it's at now and the $88 strike price for $5.76. I'd probably be willing to pay $2 a piece to close that out right here and right now and free up a bunch of dollar bills. So let's review the order, and it will free up $35,200 in collateral, which then, it'll then start to accrue interest at 4.15%, right? So what is that? What did I say? So 35,000. Let's get the abacus out. $35,200, right? $35,200. If you were to look at that interest rate of 4.15. Wait, where's this? Try it again, Bart. If we multiply, what is happening? This is the craziest day ever. I don't even know what's going on. I'm probably just because I'm excited about the March Madness, and I haven't picked out. You saw that I picked out my heart bracket that had Purdue winning it. I haven't yet picked out my brain bracket, which will be based on what I would actually put money on. And the first game has tipped off, but I got the DVR rolling, so I won't start that for probably another hour or so, which gives me time to fill out that next bracket. So if we take that $35,200 and we multiply it by 0.0415 interest rate, we would get $1,460 a day, right, on that money. And if we divide it by 365, that's $4 a day, right? And we'd be looking at 2 days. So $4 a day times 2 is 8. All you did was break even. That's a terrible example. Put the abacus away and get back to the getting. That's fine. I'm going to break even on the dollar bills. What I was trying to explain is I just paid $8 to buy those closed, and then the money that was released in the collateral will earn me $8 in the next 2 days. But it's the thought that counts, because you also, you eliminate all the risk of the market going down, crashing through that strike price, and then you have to cough that money up for those 400 shares of the Googler. So we got this Google call at 96 that really has a very sweet cost basis. Where is it? Let's go back here and take a look. So look where we're at. We're at 92.47 on our average cost. And according to that trade, according to that call trade right here, it's at 96 bucks, but Google is currently at 100. So should we consider rolling that and try to cover what would be needed? It would be this around $4.50 a contract. So that's a lot of dollar bills. Let's just look at the position to roll it and try to, if we're going to roll it though, we're going to roll it up and out, okay, to try to get more of that share appreciation between the 96 call that we have and the $100 that it's going for now. Now the downside is if Google goes down in the meantime and we're not able to sell out of that position, because what our theory is on Google is it really a long-term hold right now? Because the thesis for this year in the market is sideways to down. I could be 100% wrong and it could go up like to the moon, but I don't know. It's just what I'm telling you. So we're looking to wheel. We're looking to wheel the Googler, because it's not a dividend paying stock. It can't be a wheel of fortune trade, but it can still be a wheel where we're catching some upside. So you saw where our position was. So even at $96, we're making a few $100s per contract, plus the premium that we got when we sold it originally. So to cover to 438, how far do we have to go out? Let's take a look. So if we go out to next week, we would just about cover it at 97. So we'd bump it up $1 per contract, right? But we'd also have to pay like $5 to do so. Let's go out another week to March 31st. So 2 weeks out. And what do we need to do to cover that 440 while also making more dollars? So we could still go to the 97 and then put $50 in our pocket and then add $200 to the upside, because it is 2 contracts, right? So it'd be $100 per contract going from 96 bucks to 97 bucks to the upside. So it would still be, and the reason the premium's so high is it's in the money, right? Because Google's right now at $100.37, 39. Do I hear 40? Yep, 100. It's like racing. What's SPY doing? Am I in trouble? It is green a bit, but we're still safe. We're still safe. Don't panic. You're doing fine. So if we go up $1 to 97, put $50 in our pocket, that'd be fun. But what else could we do? Could we get up to 98 and still put some premium in our pocket today? If we go out 21 days to the 6th, can we go up to 98? The answer is yes. And we could put $20 in our pocket. But if we look even if we did something real crazy and went out a month. So see, there's going to be more liquidity here on April 21st, because that's when the majority, as far as a percentage wise, the majority of options contracts expire, because there's always going to be a weekly expiration, right? All the dailies that trade will always trade and close on that day as well. And then all the monthlies that only trade once a month close in that third week each month, and that's a Friday. So let's first check the 29-day. Check the 29-day, and we can go up to $99, 99 red luft balloons, add 300 per share on the upside, so that'd be $600. Also grab just a couple of dollars on the premium. So you know what, I'm just going to go ahead and do that right now. Try to put $30 in our pocket, okay, and increase our upside by $600. That'd be pretty cool. Pretty cool indeed. That should fill no problem. What about trying for that 15? It says low likelihood. Let's just get it going. Let's just do it now, right? Do it now. Oh, so I could eat all the gorgeous snacks I bought and watch some basketball. So covered call roll. We're trying to get a credit. And we're buying the close the 96, and then we're selling the open the 99, 29 days out. So basically I'm out. Submit that and see if that fills and puts $20 in our pocket. Leave that up for a minute. It must have filled. It must have filled. Shows, where is it? Yeah, it shows that it's still on the pending board. We'll keep an eye on that while we look to, what do we have here? We've got an 83. That one is 98.72% done. Let's see if we can't fill that for $1. What do you think? Buy to close for $1 bill. Release $8,300 in collateral. We're waiting on you, Google. If I'm on the other end, I take my dollar, because the chance of Google going down to $83 between now and the end of trading tomorrow is probably pretty slim. So we'll leave that to marinate as we look to the next move. What else we got action-wise? So that 89, 96, and so we filled the 88. So the 83 is still up there. Covered roll is still there. We may have to look at that. And then this 89, we'll come back to it in a minute. The Intel, I was going to let this just go ahead and be called away, but now I've changed my mind. I'm wondering, is it possible for me to roll this and get another $100 and another $1 per contract and upside? And because I have 12 contracts, that'd be $1,200. So let's just look, if we roll this out, how far do we have to go to cover the $1.91 debit required to get some more dollar bills? Okay, so right now it's a 28 call. Can we still go in the money at 29? Okay, so we add another $1, as we talked about on the Google. Add another $1 upside times 100 times our 12 contracts. So that'd be $1,200. Is it possible to do that? And I think the answer probably going to be yes. Let's look out 15 days. Getting close. Let's look out 21 days. So again, we're looking for this number, for this credit to be greater than this debit. So that debit's $1.92. So we're going to have to go out 29 days. We're just about there. It's at 185 and 192. So it looks like we're going to have to go out 36 days. Okay, now we're in the credit. Okay, we're at the credit, and we're going to add another $1 to our pocketbook, hopefully, right? So here we go. Let's go to 4. Let's go to 3. I'm fine with any credit right here, because what I'm looking for is that $100 upside per contract, which would be $1,200, right? That's right. Covered call roll, 12 contracts, rolling it out to April 21st. We want a credit. We do want a credit of $36, and we have 12 contracts to roll. And it looks like it happened. It looks like it rolled out and up, so adding another $1. Let's go clean some of this up, shall we? Just cough up the money, Bart. Cough up the extra $1. I mean, you saved a bunch of money on Pringles today, so you can afford $1. Oh, let's go to this, and it's saying it's only $1. 0 to $1, right? What is the deal there? Release the hounds. Release my collateral. Do we just need to freshen up? Hey, it happened. So there you go. There you go. Quick look at the SPY. Uh-oh. Oh, pressure in 395. So that thing's going to be in the red right now. Let's go back to it. Take a look at what it's doing. It's currently in the red by 157%. So we got to keep an eye on that. Keep an eye on that. Let's go back to the covered roll. And let's change that position. What did we look at? Was it 29 days out? And we were looking at 99 red luft balloons. That's not going to cover, though, is it? So we got to go out 36 days. 36. Wait, we must have been on a different number. So that number has changed, hasn't it? That number, and we lost. See, now it's gone to $5 spread on each call. So let's go back here. Let's look at this again. Let's go to the 98. We'll add $2 to it and put some dough in our pocket, right? So we add $2 to the upside, and it's on 2 contracts, so that would be $400. 55 bid ask. Okay. See if we can't get $110 and add. Yeah, so that filled. So we added 110 to our pocket. Now we rolled out and up, and we added $2 to the strike price, and there's 2 contracts. So that'd be $400 to the green in our favor as well. So potentially $510 of extra dollar bills, and then we have this 89 put. Let's replace that and see if we can just refresh it like we did the other one and still catch. It's saying we'll go for the $4 and just have it filled now. Get it off the board. Yes. There it is. So that's done. Let's check SPY again. Okay, yeah, red down, red down. Go red down. Take some of that pressure off of my credit spread, which is currently showing it's down 171. Oh, there it just ticked to 157. So that would be the red candle down, red rum. The Johnson & Johnson call is at 99%. So we're just going to shut it down right here for $1. Shut it down. And then what we'll look to do is we'll wait until Johnson & Johnson goes green again, because it's currently down 0.14%. So that may be as soon as tomorrow. And if it's in the green tomorrow, then we'll sell that call option again, collect some more premium. And you see what's happening here, our buying power, because we're shutting down a bunch of puts, our buying power is going up to the moon. Jackson is in a big hole. So what could we do to get out of it? Let's try to roll it. If we roll it, what does it say is the credit? A 310 credit to roll. We probably won't be able to roll it. If we can roll it down any and cover, I'll be excited. So it only trades monthly. So if we look out 1 month, oh, it's $5 wide. Oh no. It's $5 Y, but we could roll it to the same number, okay, and collect $100 right now, and then hope in the meantime financials begin to work their way out. The downside would be is that Jackson Financial says, hey, we're just like Signature Bank, and we're going downtown to Chinatown. And then I'll be very upset with this $40. What should you do? I could just take the gas on it between now and tomorrow. Just let it ride, and then whatever happens, happens. Because this could continue to go up, right, and get closer to the 40 strike, even if I bought it for whatever, 38, and took a $200 paper loss, I could then immediately turn around and start trading the covered calls to collect that $200 paper loss back. So let's just do that. Let's not roll it out. Let's let it ride. What you say? What you say, mate? I say let's do whatever you'd like to do, because it is your day today. $50 call, we'll just let that ride. $45 call, we'll let that ride. The 50, so that must be a roll. That's why this is showing it's more in the money than the 58 put, because otherwise that wouldn't make sense. That must be a roll. So 57.50, and currently Coke is at $60.12. So that's good. Let's close this out at 2. See if we can't close it for 2 and just get it off the books and release that collateral. It should fill at $2. Come on, you could do it. Leave it on there for a second while we go to the next Coke put. Let's go to the next Coke put down here at 58. And it's saying I need to pay $3 if I want to get it filled right now, which I do. What did we get on that original trade? $29. So that's still, nearly 90% profit. So we'll take it. We shall. I could probably just put it on and let it ride out today, but we'll just lock the profit in and get it off the books for now. Release that $58 in collateral. So there's that. That one's off the books. Let's go to the next one. Next. Who's got next? Let's look. Love-a-dove in the hot tub. It's taking some gas. Is it up over 30 yet today? It is. Hey, it's rallying. Got the rally caps on. It's up over 30. We like Love. We love Love. That's who's going to be shuffling my sweethearts back to the airport, from the airport in Mexico to the airport in Chicago, Southwest Airlines. So we love long term. And now that they're paying dividends again, they're really back in favor with us. So what we'll do is we'll do it live. We'll manage our way out of this. We're going to just let it ride into the sunset, collect our 200 shares at $32.50. So you're just going to automatically overpay? Yeah, we are. We're going to overpay. We put ourselves in that position, and then we'll fight our way out by selling covered calls and collecting dividends. So let's look to do that. We'll let Love ride. Whoa. Why is that only showing 16% in the profit at 402? Does that mean SPY is greening up as we speak? Yeah, it's up over 395, really starting to put the pressure on my 398 credit spread. So let's take a look back here, because I may have to manage my way out of that as it gets closer to even. Go back here. So if that goes back from minus 200% down to 0, I would consider closing it out just so I don't have to look at it while I'm watching basketball and eating Pringles. What else we got? We got this, we got the Tesla 170 put. Tesla is currently, why isn't it showing me what Tesla is trading at? It's either Robinhood's a little cheap today. Whoa. Up to 185. That's good. So that means my dollar bills to close that out are not going to be a whole lot. But, because of volatility on Tesla, it always has a little bit more action than normal, even way down here at 170. Let's see what it's telling us. and it would cost me like $10 to get out of it, but we got a bunch of premium to get in it. We rolled it. And does it show us the original? We rolled it, and I'll have to get out the old spreadsheet, update those numbers, because we got a nice number to start the position. Then we got this 146 to roll the position. In fact, let's just go to it now. We could dig it up, can't we? Yes, we can. Let's go to history. Don't know much. Don't sing it. Just get to work, because your video is long in the tooth again. Here we go. So let's look at that original position. Yeah. Was that it? Is it 2 contracts or 1? Whatever it is, this is what we've collected on the Tesla, because we got a couple of trades out there. We got a credit spread and then 2 puts. So we've collected a 308, 14, 166, 135, 146. So that's some nice dollar bills for not even owning the Tesla, right? We weren't even owning the Tesla. So let's look at what we have to do to get out of our positions now, and how much of that will be the profit. So it is telling us that we are at a total return of $284 if we kindly buy our way out right now. And I'm going to just buy that out at full boat by the close. That put it $17,000 back into the coffers. So that filled. Let's go to the next one. I think we got a couple of 165s on the board. Yeah, 3 of them, in fact. So we will get out of these as well. They're showing we're up $456 after buying our way out. And I'm just going to go full bore on those as well. Well, let's see if volatility gets us any action. So there's 4 contracts. No, I'm not going to monkey around with that. I like when you just change your mind in real time. So it cost me $24 to get out, but we are $456 in the green after buying our way out. So buy to close, 4 contracts, release 50 grand. And there's 1, 2, 3, 4, all of that, 50 grand collateral back into the coffers. And this should update right before our very eyes in a moment or two. There it is, 2387. Still got that Coke up there. Why don't you clean that up? Nope, leave it. Schizophrenic, bump, 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 bump. All right, what else? This is at 0. We could shut it down. Is it still going up? Give me some green down. Give me some green down, and then put me into the money a little bit here, and then we'll shut it down. What is... So we left our put on the table. This Verizon call. Verizon's not going anywhere near 40, 50 anytime soon. And there's 14 contracts. So we're going to leave that one because I don't want to pay $14 on that. We'll just let that one ride. Ride, ride, ride. Let it ride. Yes, indeed we will. Whoa, back up here. All right, starting to get into the next week. So we'll leave that. What is this? Let's sell that and get our $4 credit. What do you think? Sell to close, $4 credit. And there it is. So there's $4 bills. So what happened on that is that was part of a credit spread. And then what I did is I sold off, or I bought 4 of those. I had 3 puts out, right? And then I had 1 of those puts was in that credit spread. And I sold all 4 of those together just 2 minutes ago, as you witnessed that. That's why that left that put that we bought just on the table by itself. So we put the $4 in our pocket there. So let's go back up here and clean this one up. So let's replace that order. So at $3, this thing should work. Where are you at? There we are. So at $3, that should just close right out. And it did, releasing 57.50 in collateral. Because we don't want any, what? Collateral damage. That's right. You're funny with the dad jokes again. All right, so we're currently down $69 on that day trade on the SPY because it's pressuring 396 now. Remember, we're sitting at 398. So we still have a dog in the fight. And if we start to go red down, then we'll be in good shape. But it's trying to trend up. What's the market doing overall? So S&P's up over 1.5%. Dow is up 1%, and the NASDAQ rolling 2.26%. And that's why that Google was acting so good for us. And we were able to roll into some better call positions on that and close out all of our puts very easily. Okay, so that is that, I believe. Yep, that is that right now. We'll keep an eye on this. I won't wait too much longer, and I'll try to get this thing. I'll take a loss if I have to just to get it off the board, but I want to get it down to, I'd love to get it to break even. Love to get this one into the money a little, because that should happen today. All we need is that SPY to go down just a bit. But there you have it. That'll be that today, unless something wild goes on. I'll check in again tomorrow. Check in again tomorrow before the games kick off. Get a couple of trades on the board. See what SPY is doing. And I'll see you, you know when, in the next video.